JPMorgan loses more than $2 billion on one bad bet. So is the banking system unsound? Is it time to bring back Glass-Steagall? I'm Allen Barton. Stand by for Front Page. Joining me in studio, Yaron Brook, president at the Ayn Rand Center for Individual Rights, and Terry Jones, associate editor for Investors Business Daily. All right, Terry, why don't you give us a bit of the one-on-one here? What did they do here? How did they lose this money, and is it important?
Well, basically, they made a bad bet on a hedge strategy, and when you make a bad bet on a hedge strategy, you lose money. And in essence, they had a risk in one direction, and they said, well, we better offset that risk with an equivalent bet the other way, but it turned out the other bet wasn't equivalent, so they lost $2 billion. Put in perspective, they
on the one transaction, the bank is still profitable. That's what
the bank is wildly profitable. Yeah. It makes $19 billion a year. This is a $2 billion loss. I mean, we're talking about a bank that has well over $100 billion in capital. This does not endanger the bank one bit. The only thing it endangered were the careers of a couple of stupid traders, but it did not endanger the banking system or the bank itself.
So, Yaron, what's the issue here? Isn't there an issue of this whole thing, that the narrative that comes up, this Glass-Steagall thing, the banks are playing with the wrong money? They shouldn't be playing with their own money. What is this underlying narrative that everyone is going after?
There's a truth behind all this, and this is the idea that, look, the government is behind bailing all these banks out. They guarantee all the deposits through deposit insurance. There's too big to fail, so the understanding is JPMorgan can never fail. And sure, I mean, if I were JPMorgan, I'd buy lottery tickets all day, because if I win, I get huge bonuses, and if I lose, the government bails me out, right? So there's a certain truth to that narrative. Now, that's not what happened here. This was a hedge gone bad. Banks hedge all the time. All companies hedge. You hedge on foreign currencies, and the currency goes in the wrong direction. You're going to report a loss, but there's a gain somewhere else because you hedged. So this is just dumb. But the real issue is the issue of deposit insurance and too big to fail. The solution is not some artificial wall of separation between these funds and those funds. I mean, that's ridiculous. And Glass-Steagall was the reason we got rid of it in 1999 was it was bad policy. The solution is, drum roll, what? Let's deregulate. Let's get government out. Let's do away with too big to fail. And ultimately, I'd love to see getting rid of.
But then depositors would have to pay attention to what banks they put their money in and what those banks are doing.
Or there would be private insurance companies that would insure deposits, and there would be ratings on those insurance companies, or there would be rating agencies that would rate the banks with a sticker on the window, and you would go in. You know, markets work. It's when the government steps in and intervenes and tinkers with it and plays with it and guarantees the downside. Then you know what? People misbehave when you guarantee their downside. That's true of everybody.
All right, so in response to these losses, Cherokee Princess, high cheekbones, Elizabeth Warren, Senate candidate in Massachusetts, has called for more regulations on the banks. Why don't we take a look at what she said?
The way I see this is that we have to say as a country, no, the banks cannot regulate themselves. They are financial institutions that run the risk of taking down everyone's job, run the risk of taking down everyone's pension, run the risk of taking down the entire economy. And that means it's appropriate to have some government oversight. Banking should be boring. Banking should not be this kind of high-risk activity. And you know, that's what Glass-Steagall was all about. It said commercial banking, you know, the kind of stuff you and I understand about checking accounts and savings accounts and so on, should be one kind of activity, and it should be boring. It should not be taking on risks. If you want to take on those risks, you need to be somewhere else. You need to be a Wall Street hedge fund. Go do that, but keep a separation between those two.
You know, the more I look at her, with every passing second, I'm really seeing the Native American
I'm glad I'm not the only
there.
one.
You know, like you watch, you go, like, she really is Native American. You can see it in her look, in everything. You know, I'm glad that all that came out. All right, Terry. So a reporter for the New York Times asked Ms. Warren if Glass-Steagall would have prevented this transaction from having occurred, the financial crisis, JPMorgan's specific loss, and she actually said no, probably not to both of those. So she admits that, but she still wants Glass-Steagall. And there's a bazillion regulations, and they never seem to stop the next stupid thing that someone did. And Enron, after Enron, They put in all these regulations to make sure
those
that
work?
another Enron wouldn't work.
And
nothing. Yeah.
There's always, you can't litigate against or mitigate against stupidity in the end.
Well, and one of the things is, you know, the operating democratic philosophy here is never let a good crisis go to waste, because they want to use it to seize more control, more power over the economy, more control over your life. And the fact of the matter is, Glass-Steagall wouldn't have stopped this. The Volcker rule wouldn't have stopped this. It wasn't a major market event except for that company. It did not endanger anybody. And this is, you know, this is what you get from when you start listening to somebody like Elizabeth Warren, who represents a party that runs a $1.8 trillion deficit and that can't balance the budget and has added $5 trillion in debt to our national tab.
All right, Yaron, I want to sort of veer slightly off topic, but in the same zone, because we've seen over the last week this ongoing attack by Obama on private equity, seemingly against the wishes of many high-profile Democratic governors, mayors. People are coming out and saying, "Yeah, I like private equity," you know, and I'm sure those people are on the campaign dole for the companies in their state and city. But what do you? When the more I hear it, I'm like, bring it on. Keep attacking private equity, because it doesn't seem as amazing.
Well, this is the challenge. The challenge is, can the Republicans go on the counterattack? Because if they can, I think they win this debate easily. The attack on, I mean, compared to banking, there's complexity to it. Yes, the government has this huge role. There's a lot of cronyism. It's easy to label bankers as kind of bad, shady guys. I mean, it's wrong, but it's easy. Private equity is like one of the few bastions of a real capitalism where there's very little cronyism and where you can actually go in and show the incredible increase in productivity and productiveness in the reallocation of capital from losing industries to winning industries. You can see the massive wealth created and ultimately the massive job creations resulting from private equity. I mean, if we really did the analysis, you wouldn't have Silicon Valley if not for private equity type guys shutting down steel mills and shutting down Rust Belt companies, taking that capital and reallocating it. You know, and you can see so many examples of family-owned businesses running to the ground, private equity coming in, helping resurrect the family, making a lot of money, everybody benefiting from it. So
but no one hears those stories, Yaron, because the only story they will tell is the family restaurant that was taken over, and then private equity sold it for scrap, and their 30 years of investment in their family business went down.
Those stories are all distorted, and they're taking a fraction of the total stories being told. But look, what the Democrats are doing very effectively, I think, is appealing to emotion and short-term thinking. Yes, if you just look at a slice of what private equity does, it looks like people are being hurt. Where's the win-win of capitalism? But you can't just look at the short-term. And of course, the Republicans are afraid to touch it because they don't like these kind of issues. You know, so for example, I'm willing to say private equity is not about creating jobs. No business is about creating jobs. Business and private equity are about creating wealth, making money, profits, lots of them. And long term, that generates lots and lots of jobs, but that's not the purpose. But which Republican is willing to stand up, including Mitt Romney, and say, I was in Bain to make money, not to create jobs. Jobs were created,
and also
but that's
Obama
not the
has
purpose.
redefined the American presidency as being that of not being in charge of profits, but being in charge of everyone getting their fair shot.
And he's being so good at that.
He is the fairness czar for the United States. All right, for Yaron and Terry, I'm Allen Barton. You've been watching Front Page.